find that it's quite a nice end to end the second day with a beer, with a drink, just to relax, but also still feel free that you can ask any questions that you want. These are very candid interviews, and again, this is really important.
So, you know, I'm gonna ask you some questions. I prepared you, but not the questions. Questions that interest me, and I hope it interests our audience, you know, because we already had kind of a sales pitch, which was very good, actually, in the morning.
I tried, yeah.
And, you know, questions I have, and I think some of the audiences who might want to be entrepreneurs, you know, how did it start? You know, I mean, people always see the success, but they don't see the journey, you know, and that's, you know, tell us about it, because I mean, you were a professor, you're still a professor.
Well, first of all, thanks for having me. I mean, I definitely don't want to be here positioning success, so I really want to talk about all the problems and the roller coasters and the wounds and everything, but, you know, very much looking forward to the conversation. What I always talk about is that this notion of entrepreneurship, when you talk about it, especially in an academic setting, it's about, oh, let's go start a business. Immediately we are trained that, okay, entrepreneurship means starting the business. But what I always talk about is that it's more like a mindset. It's, can you do things when things are uncertain? Can you figure things out outside of a playbook? The impact of entrepreneurship can become a startup, could become an exhibition, could become a paper, could become a piece of art. And I think that's something that we should do a better job, especially when it comes to our education system, even from the K-12 you know, grades all the way to our universities, so people become more comfortable to live and work and get trained in these fail-safe environments. Think about our academic you know, settings. Think about our post-secondary settings. If you get a bad mark, it's very likely that it's going to stay with you forever. So it's not a fail-safe environment. It will stay with you forever, right? So we need to really come up with these cultures that really allow us to, you know, make mistakes. I don't believe in this saying that is being now a buzzword that, you know, keep failing, keep failing. No, no, no. Your vision should never fail, but you should be able to afford micro failures to really figure out the path. And for me, frankly, I always wanted to become an academic. My dad was an entrepreneur. He built a computer company, but I always wanted to go to academia. I was very fortunate to have a mentor, the former president of my university, who I worked with to start a business incubator for the university. And he gave me that fail-safe environment saying, stay, do your academic work, but we are not going to penalize you for also turning that research into a company. And that really helped me, that support that I got, which if I had to go through the middle management layers of the university, it would have been no way that I could start a business from a graduate program. But because this initiative got connected to the very top of the house that could cut through the middle management, and the support that I got and a lot of my founding team members got, we could actually be in this fail-safe environment, which was the university, keep breaking things, figuring things out. I'll talk about the mistakes a lot today. And then, you know, still, we're making a lot of mistakes, but then the company grew as part of that process.
But when was the moment where you realized, maybe let's do it a business? You know, let's do even a jump further, you know?
Honestly, that happened very organically when we raised our Series A, which is very odd to say. So
indeed,
I'll give you a little bit of a background. When we started Flybits, I had no idea and no background in banking or the financial industry. We were all, three of my co-founders were all computer science grads. So we built this platform and we said, let's apply it to different verticals. You may not believe it, but our very first customer was the Fulham Football Club. Any Fulham fan here? Okay. So basically we said, hey, wouldn't it be great if fans come to Craven Cottage and then while they are watching the show, they could actually have a second screen that receives contextual information. They can vote for the man of the match or the person of the year. First example. Then we did London Fashion Week at Somerset House. So when the catwalk was happening, people could actually see on their phone what the mall is wearing. They could navigate within Somerset House with beacons to find their stores. And it was the most fun time of the company. Trying things, breaking things, flying around the world, doing pilots. And then the aha moments like, we really cannot scale like this. We are in too many different verticals. We did Paris Metro. They launched the solution. We did smart cities in Monaco just within 2 years.
Okay.
So the speed, the pool was there in the market, but the mistake, not the mistake, I learned from it, was that I could not capture that repeatable anchor and then grow with it. I was so excited. Oh, let's do smart cities. Let's do football.
There was no focus.
There was no focus.
Which is basically very bad for any business.
Well,
if you want to
we
scale.
will, of course, but I didn't know that. And at the moment, I would say if I didn't do those things, there would have been no way that I could grab the attention of a bank. That's another way you can look at it. Then we got our Series A from actually 2 corporate investors, which I'm very thankful of. But one of them, Vodafone. I don't know if someone is here. They invested in us, which is very odd for a Series A company to raise money from a corporate VC. And then we got Bosch, the German company, invested in us. And then we got a pilot with a bank in Canada saying, hey, this is pretty cool. You know, you can map my branches. When customers walks in, I can interconnect them with a branch manager. And then I think a year into that project, our aha moment went off. First of all, they have money to spend, right? Different than public sector. A lot of data, a lot of disjointed data, a lot of customers with different needs and contexts. Hey, this could be that focus vertical for us. And then the company started to organically figure out its niche differentiations. But until this date, that DNA stays with the company. Training of the companies to go broad, to do too many things at the same time. And one of the things that I have to do, and I'm doing and I have to do more, is to complement myself by people who can focus it down, develop repeatability, develop scale. And if you figure out that complementarity, and this is not just the case in a startup, this is also entrepreneurship, which are many of you in your respective organizations that are bringing new ideas, it works very well. Complementary skill sets, people who are not similar to you, but people who
Extremely
can augment
important.
you.
What was the darkest moment? Remember?
Many, many, many.
One.
I have had some fun
how did you
times.
get out
I
of
actually
it?
tell you a fun one, and then a lot of the dark ones were during the pandemic, which I'm sure it was difficult for many of us. The difficult part was when we were raising one of our rounds, it was actually our first round of investment, I had no idea about venture funding, right? I have a very good colleague of mine, I refer to him as my co-founder. He was doing his finance degree at Harvard, but again, a student. We got a term sheet from our investor, our Series A prime investors, and we started reading like, I have no idea what this says. I have no idea how dividends work, you know, how the interests will be calculated. But hey, we raise money. But, you know, we cannot be too enthusiastic going to investors, say, yes, we sign it. Said, hey, you have a corporate finance class at Harvard. Blackline the names, take the term sheet to your class,
Very
and
smart.
essentially crowdsource it. Oh, gosh. We picked up the phone with the investors and guys, we have some serious problems with your term sheets. Line by line, the Harvard professors, students criticized this, and we got a very good deal. But that was pretty organic. Like, hey, let's crowdsource it around the ecosystem that we
For
know.
feedback.
For
Feedback.
yes. Yeah.
Because, I mean, reality is most will screw you, not because they're bad guys.
That's their
It's,
job.
it's just a
Yeah.
job. It's like, you know, and
Yeah.
that's your lesson you have to pay unless you're smart enough to soften the blow. But it's their business. It's like...
At the same time, I'm very thankful. I understand it. Like, I was a a STEM graduate with absolutely no business background. So they have to de-risk their investment as well. But, you know, I have seen both sides of the spectrum. You become too pushy and it will not work, or you become too naive and you will also. But figuring out, what I always tell, even right now, some of our students is, play in your own league. The moment you want to play at a different league, you lose. You're a seed company, play seed. You're a Series A company, play Series A. Because there are investors, they are supporters that are looking exactly for that type of a profile. My mistakes was I wanted to act as IBM when I wanted to raise my Series A. Disqualification one after another, because the lingo I used, the metrics I used were not the right ones. But very quickly, I want to talk about the dark moments, and some of my colleagues are in the room and can resonate with this. I think for many of us also was the start of the pandemic. Just before the pandemic, we raised a very successful funding round from some of the best banks in the world. You know, we were very happy. Just 3 months after that, imagine you get a big office, you keep hiring, you hire search firms, and it's exciting times, right? Within a matter of 3 weeks, the pandemic started. So imagine I hired 50% of my workforce just within 2 months. How much due diligence, how much training, how much onboarding, and suddenly you had to put 150 people on Zoom. Now we can understand it. There was a good panel yesterday. Perhaps big companies got it faster. We had no clue how to run a company, especially when 50% of them knew, across 4 continents on Zoom, right? Then the great resignation happened. I'm like, man, I'm losing people to all the big tech companies that, frankly, there is no geographical border for them. They are hiring exactly where I am, but they are hiring them for Silicon Valley, paying them Silicon Valley money. How am I going to compete? No background in, you know, I mean, I have a great team. They did a fantastic job for me, retention strategies, education strategies, figuring out programs. But there was a lot of learning at no playbook out there. But I think we relatively managed it well. But I think for many of you, at least for me, suddenly 80% of my focus was on inside the company, people, process, making sure things don't break. And this is a time that market expectations didn't change, investors didn't change, your customers and what they wanted from you didn't change, but everything else changed in your organization. We came out of it, but it was perhaps the most difficult period for me.
And besides the things you learned on the job, basically, what other lessons did you take? I mean, we talked about about burn rate, and I asked you. No, we don't say the details, but did this pandemic change something in your strategy for the future? I mean, how you handle money in terms of, some startups says keep spending like there's no tomorrow, but there could be another pandemic or could be another big crisis. And are you planning to protect yourself and your company against, you can't protect yourself against everything, but to protect yourself for the first blow?
So again, if the context is financial, safety, there is one thing I actually...
No numbers, but I mean
yeah, for sure. Every time, I mean, I lived and worked in the UK, I'm from Canada, so I really resonate with the entrepreneurial culture and the relationships and the bridges between Canada and the UK. And in almost many of my meetings, we are being compared against our Silicon Valley-based or US-based competitors. And one thing I always say is that we learned as entrepreneurs growing our enterprise businesses in Canada or the UK is that you learn that cash management early on, because you don't have the luxury to someone throwing big money at you and basically you cannot waste it. So if you manage to grow the company with discipline, as a UK-based, European-based, or Canadian-based company, especially pandemic is a massive opportunity for you because investors are looking only for companies that could manage effectively during, not just now, but what's ahead of us at least for another 18 months or so. So there are opportunities there. And for us, like almost all founders, cash management and cash preservation is key because at the moment, unless all your business fundamentals are there is no VC money. There may be VCs in the room, but you really have to be
usually
special.
what happens now is they throw money at investments already made in order
to protect them, or you have to go to
protect
private
own
equity.
investment. Exactly. And taking debt.
Exactly. Yeah.
And what's your challenge? I mean, you made a great story this morning. I mean, really impressive, but you're still small compared to. I mean, a success story, nevertheless. But when you compete against big players like IBM and who also sell what you're selling, it's not the same. But somehow they will try to package it.
Yeah. So I think there are only a very few assets that you have in order to build that competitive advantage. Number one, your team. You really need to take care of your team, empower your team, and basically be there for them. Those are some of the luxuries that perhaps, although the intent is there, larger companies may not be able to do that as effective you can. Then it's agility and speed. There was a very good, motion yesterday, productivity versus innovation. My biggest challenge right now in the company is that, first of all, how do I measure productivity? I don't have the old input metrics. I mean, perhaps it's familiar to many of you. Back then, I could see someone at their desk at 5 o'clock. Okay, the person is doing the job. I don't have those visual, contextual clues anymore, right? It's very important, I'm telling this to myself, to really manage your psychology, your biases, what to say, when to say, at what time, because things will, when you are a company of 20, you can manage. And we are not big, we are about 120 now, but gosh, you say one wrong, because the problem with Slack and email and text, you miss context. It's a one-dimensional, textual information, and it can be misinterpreted very quickly. So the amount of time you need, and cultural differences, something. I really started to value the importance of mental wellness during the pandemic for my staff. And of course, it has always been important, but I truly felt how important it is.
And what initiatives did you do for that? I mean,
a number of things, like providing flexibility, understanding preferences, a lot of, and it could be very similar to friends here. Our headquarters is based in downtown Toronto. In New York, it's Manhattan, and here is in Shoreditch. Most of my people who were living in cities, they all left to suburbs, to other cities, right? They are fantastic talents, but now my expectations should change. Like, I cannot, we have a policy, 3 days a week to the office. It's not working that way, right? You have to create exceptions. When you create exceptions, you create, to the eyes of some people, you may create discrimination. So it's not easy times, but really understanding your staff and delegate. That's why I'm a big fan of small, agile, interdisciplinary teams rather than a two-dimensional org chart, which is very nice to present it to someone, but from an operating model perspective in the pandemic world, it's very difficult to operate a company, at least a company that still needs to figure things out and innovate using that model. So we have these, we call them kind of mash-up sessions. We bring people for a purpose, but they can just go work from wherever they want. But number of programs, I have an amazing head of HR who is coming up with these initiatives, and some of it is try and error. But
yeah, of course.
Yeah.
And are you afraid that you grow too slow?
Oh yeah. I think yeah. So one thing, growing slow. I mean, we are a when you use the term fintech, right, which we are being referred to as a fintech, majority of fintechs that I see are point solutions. I'm not talking about digital banks and neobanks, but fintech as a service, many of them are point solution. I'm a robo-advisor, I'm an eKYC tool, I'm a wealth API. In our case, we have gone and built a very horizontal platform that touches a lot of platforms in a bank and a lot of people. You can easily correlate that with a very long cycle of sales. Before pandemic, we have a playbook, like, who has the veto power, who's the champion, who's the influencer, who's the compliance of data. Now, if you thought Great Resignation was bad at startups, look at banks. Now, imagine through the lens of a fintech, you develop that relationship and the whole machine is changed. And I have a limited
And we're talking about 9 months usually.
9 months,
9 to
right?
12 months to
If
close
you're
a deal
selling direct, right?
in this business.
Yeah. So as a result, we then said, okay, direct is great. We will focus on that. We really need to sit as a service on top of platforms, clouds, payment gateways. So we become more like an OEM service for the channel to move us forward. But it's always a worry and continues to be a worry that am I growing fast enough? But you also need to understand the context. There is one thing to be a point solution service. There's one thing to be a platform that touches a lot of things, and you want to play the game that IBM, Salesforce, and Adobe play, but position yourself as more agile.
And how do you protect yourself against people just saying yes, or saying yes? No, I mean, that you might not hear critical voices.
Yeah.
You don't have to follow, but at least hearing them.
It's something that I'm very thankful to my team because, again, my training has always been, and not just me, but a lot of entrepreneurs that I meet, okay, they have, especially during the first stages of entrepreneurship, have the first meeting, so excited, the person loves us, let's add this to the pipeline. Second meeting, third meeting, then, they disappear. And many of them are frustrated. But because, we then, our sales executives and others helped us. You need to map at least 7 people in an account, and in advance of going to the account, map them, interconnect them, use a different literature, someone with a veto power, someone with compliance, who's the influencer, how do you bring another? Those are sales.
But do you have like a board of directors?
We do. And that's also something that, again, if you want to start a business, that's something that you should be mindful about. I have been fortunate.
Because some of these people here might want to start a business eventually.
Yeah. And I think your board is really important. At the beginning, it may not really matter, but when you have the scale, you will realize how important they can be. They can really help your business, or they can become a huge impediment. I have been fortunate to have good board members, but I think all of us have heard scary stories. But that's why I say play in your own league. You may attract a seed or an angel investor, and they know what to expect or what not to expect. If there is one thing that I would change, if I go back to the early days of Flybits, we were a spin-off from a lab. What do you expect from a lab-based product? It worked, but it's coming out from a lab. It needs to be commercialized. It needs to be vetted. It needs to go through compliance and all that. The investor, seed-based investor, they said, the moment we spun it off, they said, you got to go hire your salesperson. I went, in my view, back then, I said, I'm going to go and spend all the seed round that I raised and hire the best possible sales executive that I find from a very well-known Fortune 50 company. I did it. Great guy.
Did it work out?
Wrong person for that time, because this person is used to having the support and the infrastructure and the brand. This is a lab-based product, right? So of course it didn't work out. So what I would say to friends who want to start a business, double down on your product until you have the one or two first anchor customers giving you feedback. Don't spend your time on these classic play, oh, go build a pipeline and sales. That comes way later. Build a great product that is solving a pain point and prove it with one or two first adopters. I mean, Jeffrey Moore's book, if you write it, find those first adopters, gain the ability. It may sound easy, but from very early on, if you want to start a business, name your 10 ideal customers and visualize how they would use your product. Those types of thinkings will navigate your product strategy, positioning strategy, market strategy effectively.
And how, I mean, something that most of my companies I'm involved in think about it. How do you find the right salesperson? Also, because I mean, a good salesperson is going to sell well to you, but doesn't mean it's going to sell well for the company. I mean, the first one was not disappointing, it was just not the right time. But what was it? How do you scale the sales team? I mean, what were you looking for?
So there is,
just
I'm sure many people agree, and that's not my background, but I agree with this statement that sales is both art and science. But I would say in a company early stage, it's more art than science, especially it's the art of storytelling. If there is one thing that I would look into a salesperson is that deeper knowledge of where you play, truly feel the pain points, not just repeat a script, right? Mm-hmm. That comes way later because you are way more mature as a product or a company. And have people who can tell good stories, right? Who can understand context, who can really translate based on who they are meeting with, who they are presenting to. Now, the more focused and pointed the product is, those cycles will be easier. But those are the first years of the business. Now, I think as the company matures, I think you need to have people who understand. I mean, it's very easy to throw technical jargons, right? And I think because of the stronger digital literacy, now data literacy, awareness, you need to really have that listening capability, absorb, and truly be that guide on the side, that consultant. That will naturally move the sales cycle forward, supported by all the techniques, pipeline generation, probability management, follow-ups, tools, but they need to go hand in hand.
What we always do here, because I mean I have limited resources of questions, we ask the audience to ask personal questions that you care about, you would like to to hear or to read, but now you can hear it. Who would like to start? Jeroen, sorry, you're always very good. Can you have a microphone here and there? I'm very good at that. Take one for the team. Perfect. We'll do Jeroen afterwards. Yes, time to think about it.
Okay, hello. My name is Vasil Panchnev. I'm from Eurobank, Bulgaria. Last year, we had our first unicorn in Bulgaria. So do you believe that your company has the potential to become a unicorn?
So, of course, I want it to be a unicorn. So the question is that what pathway can we use to essentially as an abstract metric, if you make a $100 million of an AR revenue, so you can have a 10x multiplier as a classic VC rule, you become $1 billion company, and hence you can be referred to as a unicorn. So the question is that what's the path to that revenue? And currently, the way we do that, and this may be interesting, we really create, so when the pandemic, when we actually raised our last round, I had a very healthy debate with my board. Some members of the board were saying, focus on a geography, focus your product in that geography, really hit it hard, and then develop repeatability. My view was that, no, I'm going to expand the geography. I'm going to go to multiple geographies at the same time. I'm going to plant anchor seeds, and then I'm going to grow it there. I still don't know which one would have been the right choice, but I went my way. And I think it helped us during the pandemic because when one market was going down, I could compensate it with another market. So that strategy also applies to pathway to revenue because with direct, so I go to the market direct, selling to banks and insurance companies directly. I use my channel, so I basically piggyback on them and augment their product. And the third one, we do OEM with cloud providers because cloud is a cloud for most banks. There has to be a reason for banks to switch. So when you OEM an experience design tool, you create that differentiation. That is that, parallel path to the revenue, which can help to get to that, hopefully that $100 million revenue. Because the first path, long, frustrating cycles through the lens of the fintech. But the moment you secure it, the lifetime value of that customer with the referenceability that you have will be great. You are in that account 3, 4, 5 years, and with good customer success, good delivery capability, good customer management, you protect it and you upsell. The second one compensates for the shorter cycle because you're not asking for new procurement, new papering. You're augmenting someone's product that is already in the market, smaller revenue, but faster repeatability across a bigger geography. And the third one is going to be the creme de la creme because if you're an OEM with a major core banking provider or a core platform, then you will have a land grab. Now, there's always a probability for each of these streams to slow down, but if you have a time horizon of about 3 years, with proper, forecasting, there is a chance you may become that unicorn. And the last thing I say about the unicorn is, one is the organic way of getting there, and some of you may heard about SPACs, which are also interesting ways. As an independent entity, and these are Chatham House rules, so please. As an independent entity, we cannot do a SPAC, but look for complementary fintechs. If I'm an experience designer and you're EKYC and you are a robo, and let's get together, especially if you're founders and CEOs that can work together. Together, let's go to a SPAC and then go pseudo public. That could be another way of getting to that unicorn status. It's just that I'm sure people like you can comment. You have to be careful how real that is.
Yeah, exactly. I mean, SPAC was very popular, but
Yeah.
I think there were a lot of bad performance in SPAC.
Yeah.
I truly believe that you will, regardless of unicorn or not, I truly believe that you're one of the most promising fintechs I've seen.
Appreciate it. Thank you.
And the rest will follow. Next question.
I have a microphone, so I can ask a question. There's no pressure. I'm wondering, because you wanted to start out in the academic world, so you did. Then you did a startup, then there was Corona. So what gives you energy at the end of the day, now a couple of years later?
Very good question. It has been a very strange paradox to be both in academia and being an entrepreneur. There are schools, like the one affiliated with MIT, that supports that type of a thinking. But in majority of the cases, you're living in a paradox. Your peer-reviewed colleagues call you, oh, this is a business guy, And then when you come to your, business, will say, oh, the crazy scientist is talking about this. So you really need to be able to find the complementarity between the two. If you do, that's a powerful synergy because on one side, you maintain that ability to discover in a fail-safe environment. You get access to amazing talent. You can train your talent as a flow into your company. And then on the other side, you gain the ability to truly commercialize the impact of your research. You just need to find people who can manage that. But it hasn't been easy. It is not easy. But one of the things I would love to write about and talk about is the symbiotic relationship between our post-secondary institutions and our startup ecosystems and the incubators, and if you bring them together, there is a significant opportunity for economic growth, because in a lot of, in the UK, in Canada, in parts of Europe, we need more startups that are deeper tech, that are building with IP that can enable a broader ecosystem. In parts of the UK and Canada, there are amazing startups that are very much functioning on the presentation and application layer of stack. We need more deep tech entities, like things that are happening in the Cambridge Fen. We need more of those entities supported by other ecosystems like Shoreditch and others. And it's going to be the role of government to put them all together, so as a whole we can scale.
I think we're done for tonight with the interview. Would you like to say something we missed and you would like to share? Something that you care as final words?
I just want to say I appreciate it. First of all, thanks to Johnny and you. This is a very unique and a special group of people and a setting to be in, that people are so comfortable sharing and talking. Very, very different than many other things. So, I just want to say thank you, and very much looking forward to staying in touch with all of you. Again, as I said, all of us are entrepreneurs. It's not just about a business. It's this mindset that you are here sitting and saying, hey, I want to make my company better. I want to do better for the company. How do I do it better? Let's talk to people to come up with new ideas. That's frankly entrepreneurship, and I'm glad that we had the conversation.
It was a great privilege, and a great privilege to be on stage with you and in front of this great audience. And thank you, Johnny.
No problem.
Thank you.
Thanks.